Our next guest says tariffs will soon start to take a bigger bite out of employment broadly, which spells rate cuts as early as June, and he still sees 3 this year. Bryson is the chief economist at Wells Fargo. Jay, a not very happy note to bring you in on, but, why do you think we're going to, the jobless claims, all that's still good. Where do you think the deterioration comes from?
So I think the deterioration, Kelly, is really going to come from consumer spending, right? And tariffs, at the end of the day, are going to raise prices, and what that does is it reduces or it erodes the growth in real income. So people have less growth in purchasing power, and that causes a real slowdown going forward in terms of consumer spending. And then, again, some of this uncertainty right now as it relates to tariffs, if they're coming, if they're going, whatnot, that's not a really great outlook for business fixed investment spending either. So, we see just the domestic demand in the economy starting to decelerate as we move forward. Both consumer and business driven. Steve, what do you think?
I'm trying to get past the uncertainty of what I want to know what's going through Mary Barra's head right now. And how is she figuring out what to do? We had a gentleman on earlier today that said it was going to take a year and a half to plan until you broke ground on the plant to bring it back. What I'm interested in is looking at the market cap of these companies. Look at Ford, look at GM. The market is not giving them any upside for sales or anything. So what interests me is you're asking these companies to do massive capital investment to bring back manufacturing to the United States. What have you done to their share price, ergo their cost of capital? You've raised it. Well, so you've made it harder for them to do that which you are asking them to do.
That's totally fair, but also, as we are saying when we introduced the subject a few minutes ago, they're not even the big 3 anymore. I mean, these companies had shriveled in market cap over the... Do you know how upset Ford investors are? The shares have gone nowhere in like 20 years. So at that point, I don't know if another 8% on the margin or whatever the number is this year, it matters as much as how are they literally going to do this and have to make these big investments if that's the direction they go to bring big plants
I just don't think
here.
you made it any easier. What I was wondering is whether or not the Trump administration, maybe meet me over at camera 3 over here, would consider some kind of assistance to these car companies whose market caps and financing you have made more difficult, the way you helped farmers back in 2016 and 17 when you tariffed their broccoli. Or actually, it wasn't their broccoli.
Or look at the chip
Soy.
industry. I mean, how much a company like Intel, if it's important enough to U.S. security, then look at the handouts it's going to get.
I mean, if that's what you have to do, if you're going to get $100 billion in from the tariff side, maybe you want to funnel some of that back to the auto industry to make it possible for them to do the investments, sort of like a CHIP Act for the car industry.
Jay, what do you think?
We just thought of this. We're making stuff up, Jay.
Well, yeah. I mean, but where does the money come, right? I mean, we know that we're looking potentially at a big extension of the tax cuts that we had in 2017. We don't have a lot of room here to play around with. And so maybe what you do is you use some of the tariff revenue and you recycle that back towards, as what Steve is talking about here. I mean, it's not going to be through an act of Congress in terms of the reconciliation bill. So it's going to have to maybe come from the tariff revenue.
But that's so ironic because if you use, first of all, if you get the tariff revenue, then people are not reshoring. So it's got to be one of them. But second of all, if you use the tariff revenue to subsidize the U.S. automakers, then you're not using it to pay down the deficit. And third of all, there's these...
Wait, Kelly, that's the problem.
Right.
What is the intention here?
But that's why the 10-year...
Is it revenue or is it onshoring or is it both?
But look at the 10-year. And this is telling us everything we need to know about how much restriction or austerity is coming down the pike. I don't think much is coming. There's a reason why there's rumors that Stefanik is not going to the UN anymore because the margin in the House is now too tight. And they have to do, Jay, to your point, they have to get the budget bill done just so that taxes don't go up at the end of the year.
Right. Yep. So the next few months are going to be really, really interesting as it comes to fiscal policy. I mean, we're starting to get a little bit more clarity right now, a little bit more in terms of trade policy, but fiscal policy, I think, is going to be the real, kind of wild card in the next few months here.